What's going on, ladies and gentlemen? Welcome back to the channel. My name is Camilo from Trending Waves. I hope you guys are well. So what we're going to do here tonight is we're going to review the SPY and the Qs using our preferred method of technical analysis, which is the Elliott wave principle. Now, if you're new to the channel, what we normally do here at the end of the market, with market closes, we review alternate versions of the bullish count and the bearish count for both of these charts. Okay, one will suggest for the upside, the other one will suggest for the downside. So tonight we're going to try to see if the levels that we've so far called out in these videos, in my previous videos actually, if you've seen the previous videos in this channel, you'll know what I'm talking about. So either we are in the wave B or we are kind of pulling back so ever so slightly to find support at the levels that I'm going to show you guys here before we continue to the upside. So in other words, we are here in a very, very critical point that is either yes or no. Okay. So let's dive into the analysis. Let's take a look at the SPY, and we're going to focus from price action from the January high to the February lows, then to the March pivot point that gave us this rally. Okay, so I'm going to turn on our labels for our preferred count, which is the main count, and this is the bullish version of it. Okay, so we're still calling the top here as the wave 3 on January. We then sold off in wave A, up in B, down in C for the wave W, 3-wave pullback to the X, ABC to the Y, and then 1 ABC to the 2. Okay, I'm going to take a quick step back here before we continue reviewing because we're going to zoom into this price action here to dissect the wave structure. This trend line I've been noting for a very long time for it to be a very, very critical point in this in this downtrend. Okay, we originated the trend line on January the 4th. It was then confirmed here on January the 13th, rejected on the 10th, rejected on the 3rd of March, and then we're now breaking above it. Okay, and we're impulsively getting out of this now. Okay, so I'm gonna take you guys down to the 30-minute time frame, and we're gonna take a look at price action, this area here from the 24th to the 23rd of March. Okay, down to the 50-minute actually. Now, in all my videos, guys, we were anticipating that this was going to be the wave 2, right? Wave 1 here and wave 2 would have been somewhere around here. Now, it is not common to see a wave 2 pullback that is going to be, just shy of a 786, right? 786 being a retracement from the low of wave 1 to the high of wave 1. A retracement will give us a support zone using our Fibonacci levels. I'm just going to quickly show you guys what I'm talking about if you're not familiar. So we'll take this Fibonacci level here, and then we'll take a quick zones, right? Anywhere between the 23.6 and 50%. So these three levels serves as a good support zone for a wave 2 pullback as a retracement to correct the entire rally in the wave 1. However, we did not get that. Right, initially we did, right, because if I just do undo here, we see that the 38.2% retracement was a zone where we saw the market bounce. So this was A, B, and C, which gave us reason to believe that that would have been 2, and then the rally continued. However, due to the geopolitical events and market uncertainty, this thing kept on going down, and we kept on trading sideways. Now, where did this land? Where did this give us a support zone? So now I'm going to do the same exercise, and we're going to take a retracement from the low to the high, and we're going to go to the 786, which you can clearly see here was our level of support. Now, it's not, I'm not a fan of it. It is not common. All right, let me repeat, it is not common to see such a deep retracement, because oftentimes when we see the third wave come out, it will be a really short one, or it will be a tricky one to track because the wave 4 will be so close to the wave 1 that it gives us a, normally you see the wave 3 be 100% of this wave 1. In this case, we would be open to the idea that a 1618 is possible. In this case, it is likely at this point. Now, out of our March 14th low, okay, we went up in 1 and down in 2, which held a 50% retracement support. As you can see here, we were still rejecting this trend line. Okay, we rejected it, sold off, and then we broke out. Okay, we broke out. Now, what is these levels that I was talking about that I'm going to review with you guys here that are do or die, in other words, for this market to show its true colors if we're going to resume to the uptrend? Okay, so these levels are the following. Now, we have out of the wave 2, we have wave 1, wave 2, 3, 4, and 5. Let me repeat this again. 1, 2, 3, 4, and 5. And now we're completing this wave 3 wave pullback into the wave 4. Our first level will be the previous wave 4 of its lesser degree. Normally, what we see here using our Elliott wave tools is that a wave 4 will normally gravitate back towards its previous wave 4 of its lesser degree, right? Of the parent degree, rather. Now, I'm going to illustrate one example will be on the daily time frame, okay? Our daily time frame, you see here, the primary degree, which is the higher degree than the intermediate degree, you see that these two levels are close to each other. All right, this was a zone of high interest for support, which we held it, right? We were just hovering around it. We were breaking below it, bounced back, broke below it, bounced back, broke below it, and then eventually held it as support, and then we ripped higher. So wave 4s are normally areas of previous support for the new correction in the higher degree. Okay, so back down to the 15-minute time frame. So with that in mind, right, that is an Elliott wave guideline. With that in mind, we are expecting price action to either continue lower to this zone, which comes at 440.53. If it holds, right, it'll likely hold. I mean, I'm hoping, right? Let me hide this for a second. You know, doesn't have to come down this way. It can hold a 23.6, which is an appropriate level for a wave 4 pullback, right? At this point, we are looking at a pair between these two corrections. Okay. So these two corrections, this one, for instance, this wave 2 took about 17 bars, right? About four hours, okay, to complete. Now, this one took about 1 day, okay, 26 bars. Not exactly equal, but it is displaying the guideline of alternation, this being a directional wave 2 pullback, this being more of a sideways correction. So A, B, down, and C. Now we still have the possibility of continuing lower down towards this 410. Now I mentioned at the start of this video that there was going to be a second level to watch for if this 38.2% retracement breaks below. Now if this breaks, the next level to watch for is this wave 1 high. I'm going to draw a line here and I'm going to show you guys why. So 434.51 rather is our next support zone, our must hold area, if you will, because wave 4s cannot retrace beyond the territory of its wave 1. All right, we cannot close below it and then bounce. At that point, this wave count is invalid, and then that brings us to our next wave count, which is our bearish count. So I'm going to hide this, right, and I'm going to turn on our old count number 2. Okay, I'm going to take you back up to the 1 hour time frame, and we're going to review this real quick here. Now, this will suggest that, you know, same deal. January the 3rd, January the 4th was our high in the wave 3, 1, 2, 3, 4, and 5 to the A, B, and C. So now the B wave held a 786, which is appropriate. Okay, oops, which is an appropriate zone for support. Now we have 5 waves, so this is 535, which is an appropriate wave a correction here. Okay, now the wave C will be subdivided into 5 waves, although the angle of ascent, it is very impulsively, right, but it's still holding the zones of resistance that resemble, not resemble, but form the characteristics of a wave B pullback. Now, what are these levels? These levels are the following. This green line here, which is our green 5th level, is a retracement from the high to the low, gives us a 618. We found resistance. This 1272 is a retracement from A to B, gave us resistance. And this 100% is from A to B, it gives us a 446.27 resistance. So we have 3 levels of degree structures that gives us resistance. And now we're looking to see if we're going to pull back. Now, for this level, for this count to confirm, we have to break the levels that we talked about in the bullish count, which we can clearly see them here anyway. So what are these levels? Again, is the previous wave 4 at 440 and the wave 1 here at 434.51. Okay, this zone here should give us some support in our bullish count to take us on higher. So remember, guys, we have to maintain above that range being in the bullish count. That range is the zone 440, 431. Okay, I'm going to draw a blue box here, and this is the area that must hold. Okay, guys, so let me take you over to the cues. Look, if you guys have any questions, please leave your comments down below. I'd love to interact with you guys. Here we go. So let me just adjust this chart. So we're gonna review our main count, and our main count is suggesting the same thing. So wave 3 high, okay, WXY to the fourth wave. Now the fourth wave completed on March the 14th, March the 15th, while the spice wave 2 completed on excuse me, wave 4 completed here on February the 24th. Now I know that you guys may be asking yourselves, shouldn't these two charts be in sync? Not necessarily, guys. We don't always have to be in sync. So we can be, one can be lagging, the other one could be leading. Okay, in this case, we see that the SPY is the one that's leading the count to the upside. Okay, now the wave 4 here completed on March 14th. 1, 2, 1, 2, 3, 4, and 5 to the 7, 8, 6 of wave 2 to the 3 to the 4 gives us a completion of the wave 5. Wave 3 was just shy of the 1, 6, 1, 8. Now we're gonna get a wave 4 pullback, and this wave 4 pullback again will gravitate towards its wave 4 of this lesser degree. Okay, so that's another zone. Same thing as in the SPY, guys. We got to look for a pullback down this area. If not, if price action continues on lower, say something like this, and we don't hold this area, we bounce and then we fail, then what does that mean? Same deal. It means that this is no longer the valid, the count, but rather our alternate version of it would be the following. So so we have here our wave high, 1, 2, 3, 4, and 5. Okay, we have our A wave, A, B, and C. Now the C wave here in the green Fibonacci level, we're just shy of the 50% of 360.45 and just shy of the 618. Okay, guys. So again, if we don't hold the zone, then this is the likelihood of the count. All right, guys. So I think we have pretty clear understanding as to what is going to happen. We have to be very, very agile as to what we got to do, and we can nibble over here. We don't have to always be scared as to what the market's going to do. But if we are overextended and we start worrying about what the markets are going to do, then it is a very critical thing. Okay, guys. So always remember to size your positions accordingly. Do not go heavy if you're not certain or the trend is not to the favor. Okay, guys. So thank you so much for tuning in. Hope to see new faces over Trending Waves, the Discord group. The link to the chat room is pinned down in the comment section. Take care. See you guys tomorrow. Bye bye.